This is a busy week for earnings. There are hundreds of companies reporting this week. Sure, we finished most of the Mag 7 except for NVIDIA, but many of your favorites are on the deck for this week, including companies like Uber, Lyft, Disney, Shopify, and many others. But those aren't the ones I'm talking about this week. I have 5 other names that may or may not have tariff impacts. They're big consumer names or just popular stocks that have rebounded a bit here off of those April lows. What are they? Let's dive right in and check out their charts. Okay, the first one out the gate is AppLovin. APP is the ticker. And I know many of you have been in this stock. I brought up the price consensus and EPS surprise chart because what's going on with the consensus is almost just as important as the miss or the beats. You can see it had a big beat last quarter, and that was when the shares kind of peaked out here, 35% beat. But you can also see that the analysts have been raising the consensus for 2025, 2026, although it's kind of flatlined here in the recent weeks, waiting to see what they're going to say on this earnings call. So year to date, the shares are down just a little bit over 7%, and 1 month though, and you can see the 1 month coming in down here and then bouncing is up almost 38%. PE isn't cheap, even with this massive double-digit earnings growth that's expected. PE of 45, but this is a growth name, so nobody's really paying any attention to that. Otherwise, it's got a good earnings surprise track record. You can see all the beats here going back into 2023. We'll see if it can keep that streak alive. So this is AppLovin, ticker APP. Then I want to switch over to one of the hot names in the car industry, and it's Carvana, CVNA. And this is also an interesting chart, really good earnings surprise track record in recent quarters with just this one miss here in 2024. Also coming off a big beat last quarter, 133% with that long, big arrow. Shares have bounced as well, much like AppLovin here off of those recent lows. 1 month, shares are up almost 60% here, trying to get back to these 2025 highs. Year to date, now up 27%. And you can see the analysts are liking what's happening. These earnings expected to rebound and still a little bit higher here. So we're not really seeing the earnings estimates being cut here. Not yet. We're waiting for this earnings report. PE of 70, very stretched, but nobody's caring again because this is a growth stock with the growth seemingly intact for right now, but we will see. That's Carvana, CVNA. Then I want to switch over to shoes. We just had a big announcement that Skechers, a company we've talked about here on the Earnings All-Stars, is going to be acquired. But the other one we've talked about is Crocs. And look at that earnings surprise chart. No misses in the last 5 years. Now we're getting a little bit past the very beginning of the pandemic back here when a lot of companies did miss those initial quarters. And now we just got this great earnings surprise track record. It is an earnings all-stars, but it is going to have exposure to the tariffs. And you can see this, the shares really weakened here in 2025. Year to date down about 8%, but trying to recover a little bit off those lows down here, but really just in this narrow trading range. So no real momentum up or down. PE is very cheap, just 7.5 times. So complete opposite of AppLovin or Carvana on the PE side. And you can see the analysts have already taken down 2025, 2026, but they did that in 2024. A little bit of weakness still here going into this number. What will Crocs say its impact is on the tariffs and even just the slowing of the consumer, although maybe they haven't seen that yet as the consumer races out to buy some of these items. before the tariffs really, are put in place. So we'll see a lot going on with the shoe companies. And this is a big one, Crocs, Crox. Then I will stay on the tech side a bit because one of the big tech social media names is reporting this week, but it doesn't get as much love. Pinterest, Pins. And one interesting thing that I've been paying attention to on Pinterest is that it recently announced it was going to put a feature in so that teenagers would not get notifications during school hours from like 8 until 3. So apparently Pinterest, very popular with those, 13 to 18 years old, and they're getting distracted in class by the notifications sounding on Pinterest. So they're putting that feature in so they're not distracted during class and then can go on after they get out of school. So this is an interesting development because you might not think of Pinterest as a big platform for, the very young teens type of consumer, but that's huge because their shopping feature is very dynamic. I am on Pinterest and I was on recently, and I'm shocked at how much they have improved the shopping feature on the site. So they are coming off a miss last quarter. That's a rare one. It looks pretty small, just 11%. Shares have fallen here over the year to date, down 5.2%. 1 month, they are up 6.6 because you can see they are turning up off these lows. But look at the Pinterest earnings estimates down a bit here, both for 2025, 2026. Still seeing some growth, but down a bit there. PE of 15.5. So this is one of the few social media stocks that is still a value on just the PE basis. So I'm liking all of that, but what are they going to say? And advertising, one of the first to get cut in times of uncertainty and economic slowdown. So Pinterest, this is a big one, PINS. Then we are going to stay on the consumer. And this is a hot restaurant stock, Sweet Green. It's kind of been overtaken in recent months by CAVA. And you can see maybe why. A lot of red here on the earnings surprise. So it doesn't have a good earnings surprise track record. Lots of misses there. And then earnings, while expected to grow, have come down from these recent highs this year. A lot of pressures on the restaurant chains, even the popular hot ones. So year to date, these shares are now down 39%. Over the last month, still down 6.4%. Now, the difference between CAVA and Sweet Green is that Sweet Green still doesn't have a PE ratio. It's still expected to lose 60 cents a share this year and another 46 cents a share next year versus CAVA, which will report next week, expected to see 55 cents a share versus 71 cents in 2026. And just for kicks, let's look at CAVA's chart and kind of see what's going on there, even though it'll be a sneak preview for next week. They too are coming off of their first miss last quarter. These shares have bounced off like we've seen a lot of these companies do. And even the earnings have come down a bit, just like we just saw with Sweet Green. But again, positive earnings growth here with CAVA. And so we'll see, how much are they being impacted? Are their consumers pulling back at all? Are they going to see any tariff impacts on the food and whatever else they're using? Because there's a lot of things that go into restaurants you might not think that are imported, like, say, the plastic containers, cups, maybe even the silverware that is used in a lot of these restaurant chains. So I'm going to be watching all of these. That's Sweet Green, ticker SG. This is CAVA, ticker CAVA, reporting next week. So we'll see a lot of restaurant stocks this week. Again, we're seeing all of these big consumer names, so we're going to get a read on what is happening. It may be a little too early in the tariffs and what's going on with the consumer to really see much of an impact yet, even though we're going to have all of April that these companies have seen, still kind of early in this whole process. But I'll be tuning into all these names and more. I'll be tweeting out some of these charts all week long. Be sure to get them on Twitter, on my Twitter feed, just under Tracy Reinick, also on Blue Sky, and I'll be on StockTwits with some of these charts. And as always, I'll be back next week with some more earnings charts.